Hello traders, hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I will look some of the most interesting price patterns of this week. This video has been brought to you by Orbex. I will take a look at the euro dollar, euro pound, the S&P 500, dollar Mexican peso and Aussie dollar. Now, if we firstly take a look on the euro dollar, what you really should be aware of is probably the higher degree time frame chart. Now notice that on a daily chart, despite very volatile moves in the last few months, actually the price hasn't gone far when looking back at the data from start of 2019. What I see is still actually unchanged based on price, which means that there are no directional movements despite very aggressive sell-off that we have seen a few weeks back. So since market is now trading back to the upside and in this choppy mess that we have seen over the last few months, it appears that this corrective wave B can still be in progress. It's a sideways price action that may also unfold not as this expanding triangle, but maybe as some other corrective formation. Because in a sideways price action, it can be very tricky and sometimes hard to recognize the very clear and best probable upcoming move. So when this happens, it's really important to have different wave counts on the radar screen. So despite this bounce that we have seen in the last week, I'm observing two wave counts. Now the first wave count is that you have this rally still in three waves, but you have an extended five sub-wave structure within wave C. So in such case, you would expect a weakness. But because there was a very aggressive bounce, unfortunately, this price action, this recovery can also be counted in five waves, like shown it here on the right. So now it's very important to be patient, okay, and wait on a proper price confirmation to make sure which of the wave counts is valid. So either you will have a 5-wave drop from current price action, from current price levels, and if you will see this 5-wave movement overlapping the wave A, then this would be a very nice indication that we are probably going even lower after a short-term rally. If on the other hand we get a 3-wave drop and then a bounce from that potential 109 to 109.50 area, then this would suggest more upside. Okay, so that's the game of patience. Okay, it's I know that euro dollar is tricky at the moment, and what I learned over the past few years, that always when you have a tricky price action and multiple scenarios from Elliott wave perspective valid, you just observe it from a distance, don't rush into any trades, and rather try to focus on something that is more clear. So with that being said, let's go further and let's rather take a look on euro pound. So the euro pound, for example, has a little bit different wave structure. I mean, trend is definitely clear here. Okay, it's bullish. Even on the weekly scale, okay, you can see that the trend is bullish here since this 2015 lows. Well, what I really like about the recent price action is that this rise from 2019 lows is still not in 5 waves. That was a wave 1, that was a wave 2, you have a wave 3, probably now wave 4, and you are expecting wave 5. Looking at the substructure on the 4-hour chart, or maybe even better on a 1-hour chart, you can see that this wave 4 is actually structured by 3 waves. In fact, there was this potential triangle in the middle of this drop, meaning that this cannot be wave 2, meaning it's a triangle, then it must be a wave B. So I really like this substructure here and the overall price action, but of course, again, the confirmation is important. So if you see a bounce in 5 waves and you see price rising back into the middle of this wave B triangle, then I think that pullbacks can be very interesting to look for potential long opportunities. But again, you need a proper price action. You need a bounce firstly, because only then you will be able to identify where and when and if this was really a fourth wave correction to where it finished. Okay, now let's take a look on the S&P 500. Now stocks has recovered very nicely last week, and maybe this is the beginning of more upside. So if we let me just firstly take a look on the higher degree chart, then maybe that's was a completed wave 4 down here. I know it's very tough question, but how the price action looks on the hourly chart, I would say that even if we are in a corrective rally here, you would still expect more upside into wave B. Okay, so I'm thinking that this swing lows here, this zone will be very important, can be triggered this week and then, or maybe next week, and then let's see the response from there. If we get a breakout to the upside, of course, then bulls will resume. If we see a new sell-off, then you will get a wave C down here. Okay, so for now, looking at the hourly chart, I think that more upside is coming. Now here you have this very nice clear substructure from that low. You have waves 1, 2, then you have extended wave 3, wave 4, you have a wave 5. And what I like about the current price action, that we already have some overlapping activity here. So either correction already finished here, but primary, I'm expecting another dip here back to retest this wave 4 lows, maybe 50, 61.8% could also limit the weakness, and then watch out for a reversal higher. So I'm expecting on stocks to see more upside. Maybe that's only wave A, and you have a wave B down here, and then you will see a wave C rally. Maybe even waves 1, 2, 3 will unfold. But in the near future, I think that maybe some consolidation today, tomorrow will resume here, and then you see a new jump in price, maybe already on Wednesday. At the same time, if the S&P 500 would really see a bounce here, then watch out for dollar Mexican peso. I mean, this one is sometimes a very good indication for risk on, risk off sentiment, and we have seen a very nice drop here on dollar Mexican peso, meaning that a new, at least corrective pullback can be in the cards. You have 5 waves down here actually below this impulse channel, meaning that wave 5 is done here and that you are now reversing. So watch out for this third leg drop, which could be the case when stocks will again maybe find a support. At the same time, watch the crude oil prices. Maybe you get a final push down towards 18 or $19 per barrel, but then I would be expecting a higher degree correction. If maybe these stocks will just collapse from here, then it's always good to have some pairs, dollar pairs, maybe on a radar screen for potential more dollar strength, because in such case I think the dollar strength will be the case. So I'm looking here at Aussie dollar. We have rallied very nicely, but now we are at 38-50% retracement compared to the previous drop. So it's a do-die zone, very important zone when you're tracing out the fourth wave. And looking at the hourly chart, in fact, you have overlapping price action here. So let's see what happens up there in the next few sessions. But if you, once again, if you have or if you will see a 5-wave drop back below, back towards this zone swing support here, then I think that more weakness will be seen. Okay, obviously this would be some kind of, as I said, backup plan if maybe dollar will suddenly see a recovery again and trying to erase the losses that we have seen last week. Okay, traders, thank you very much for your attention. Hope that you enjoyed this video. I will talk to you again next week. Have a good day. Bye.